What's up, guys, and welcome to Spark and Trade. We are here today, May 10th. It is a Wednesday. We had a pretty nice week so far. I hope you guys are having a great time out there. Today, I decided to talk about my pre-market setup and what I'm kind of looking at. I don't really trade many names. I'm only just trading futures, whether it be NQ, ES, SPY, ETFs, or the QQQ. Which I should trade more. But basically, I'm trying to trade, just focus on a handful of, either the entire ETF or just the futures, because it just reduces the noise of trying to go catch something, right? And that's just my whole reason for just focusing on a handful of stocks or names. So with that being said, in the morning it's relatively easy for me to kind of pick out how I'm going to attack the morning. But my routine has always been the same. Sorry about that. I take a look at the macro trend. The mouse is currently on the left chart. That's going to be your daily time frame. This daily time frame is bullish because this cloud, which is referred to as the money zone, and the reason for that is that you're going to see wicks occur at this zone, right? Wicks getting us out of there, and that's a daily wick on the 4 hour that came up. The 4 hours on the right chart, that came up letting you know that the market reacted violently from this level. So some people would just kind of draw that as a possible level and say, oh, the market should react from this level because it did before, right? And maybe it does. Those are your supply and demand zones. So someone would probably have that zone there as a supply and demand zone because of this wick that occurred on the far left chart during this price action. But if you look at my right chart, which is your 4 hour chart, that wick occurred from the money zone on the 4 hour. So we like to think of this zone as easy money, right? This might be another easy money zone, 4 hour wick that popped up. Okay, look at this one here. You got another wick that pops up. As we go back into this kind of broke that zone. I mean, we had a pop here, but the condition on the right is kind of bearish, so I won't even give you guys too much of that. This is a lot of chop that occurred, but a lot of it came from a 1 hour money zone. 1 hour money zone, not really there. These two wicks came from a 1 hour money zone. Okay, so as you can see, it's not perfect, but that's where you can catch some really, really good licks in a bullish trend. Okay, so now that you understand the money zone concept, we are just kind of taking advantage of an opportunity to enter the market at a zone where we expect a wick. We expect price to react and move away from this quickly. If you have that sort of psychology, then you know that if it doesn't, you probably didn't catch that zone. Okay, remember that price needs to react from the money zone, or you're probably in the wrong area of that trade. Now you can catch the money zone as it's coming down and you just kind of enter and it's still going down, but you want it at some point to snap away from that zone, keeping this zone as your stop zone, because price should not really break below it. Okay, this is the 4 hour one. Let's see. Okay. This wick here, and then this wick here, okay, and then this wick here on the 1 hour. So price doesn't really break that zone without reclaiming it very, very quickly. All right, with all that being said, let's clear the chart again. So now that we know the money zone concept, I'd like to take you into what I actually do in the morning. I'm only looking for levels, and I'm going to apply that money zone strategy throughout the day as long as we're at a decent level, okay? So once we saw NQ macro and we see that both time frames, let's go, this is bullish and then this is bullish, we know that, the market's bullish on the daily and the 4 hour. That's great. Let's take a bullish trade. But where are we going to take this trade, right? The market's whipsawing and does this every day. So we don't necessarily know where to take the trade yet. All right, so what I do is I pull up the 1 hour, and on this 1 hour, I take a step back. Are we bullish? Yes. So now we have daily, 4 hour, and 1 hour bullish. Oh, that is awesome stuff to kind of be a part of, or that's great information to know. But still, where do we get in? What do we watch out for? So here, This line, that's this red line that came in, that's a horizontal red line here. Ever since the market rejected that line here, it came back, retested it, rejected it again, kind of came back now after CPI data. That's this big white candle that happened around 8:30. So that's that entire candle. And the market snapped. It like just went up. All right, cool. So the market snapped. It's at this zone. All right, no problem. So let's take a look at another demand zone. So I look at this demand zone, and that becomes another level. So 13,273 is demand, 13,360 is supply on the 1 hour. But in order for me to know this on a smaller time frame throughout the trading day, I changed this into dark red. I hit OK, make this a 5, hit OK, and that becomes my level there. On this smaller time frame here, I turn this into a dark green, hit OK, make that a 5, hit OK, and those become our level of supply and demand that we're basically looking out for. So once we're done with that, and we know that we're kind of looking for a money zone entry throughout the day, we just don't really want to take it at supply because that can get rejected. So there goes your 1 hour level on a 15-minute chart we just switched to. This 15-minute chart has its own levels that it's sort of creating, giving you a more minute, accurate concept of where the market could either bounce or reject, right? Supply and demand. So we do the same exact thing. This line came in at 9 o'clock, way before the market opened, right? 30 minutes before the market opened, we have a line causing volume that could reject this level. I like to start the show at 9 o'clock so you guys can see that sometimes these levels come in after that 8:30 to 9 o'clock kind of volatility. So I want to see the market kind of form this supply zone or demand zone, and then put it there. So there goes our 15-minute supply at 13,408. Whoa, where's demand? Well, we don't have any demand currently, right? Down here, no real demand. It's all the way down here, and that's all you're working with in the morning, by the way. We don't have anything but this data in the morning. So I could put demand way down here. I could. However, you could also put demand at a previous supply. So my demand became that level this morning. So 13,279. All right. Once I have that established, what I do is double click that level, put this, double click that level, put this on 3. Once I put that on 3, I need to know the difference between that one and the other one. So we'll make this one maybe that bright green, hit OK. Okay, so now we know, that's supply. Oh boy, what am I doing? Make it a little bit bright red. All right, so we know what's going on there. That's 3, okay, cool. So that's our 15-minute supply. Here's our 15-minute demand. Okay. All right, so there we go. We have levels on a macro type of time frame where the market should react from. Next, I go down to the 5-minute and I do the same thing again. We had this at 8:30, right? Like around 8:30, 8:45, that level came up. No real demand prior to the open, which is at 9:30. So I'll just take this demand, previous existing demand, or I could take this one. Let's take that one for shits and giggles, right? Which is your previous supply that turned demand now because the market could possibly, react from that market, from that zone. So if I take that and I turn this now into a very light kind of green and make this 1, I know that this is a 5-minute line, and I know that this is a really bright red 1 5-minute supply. Okay, and there lies your levels before the market opens. I need to now trade this market and kind of figure out a plan. Now, we spoke a little briefly about possible money zone entries. In the morning, they gave us, I'm going to highlight all the money zone possible entries in a circle. And then I'm going to highlight what I consider are reversal trades to the current macro trend. So in this case, since the macro trend is bullish, we're going to take shorts at every supply level that we believe is a good level to take. Okay. We're going to go long with the market at a money zone, which means we're going to take a bullish trade since the macro is bullish at a bullish money zone. I'm not going to tell you which trade I took and how I execute the trades, but this trade here is a bullish money zone entry. Let's highlight when the market opens. The market opened at 9:30, which is the beginning of this line here, horizontal vertical line here, right? So that line tells us that, okay, the market's open. Price literally opened in this zone, in the money zone, and then it snapped out of it. I don't like this trade because it's at a 1 hour supply line, so I wouldn't take this. So now, in order to understand where price is in relation to the 1 hour, the 15 minute, and the 5, we have to have all three charts open. At the open, whatever, right? So let's say you missed this trade. We do have 15 minute supply here. You can take the 15 minute supply trade down. Okay, that works out for a nice little point. But where's the market going to possibly, bounce at? We are now looking at the 3 time frames that I use in order to trade. And now the market is open. It's live. It's kicking. We got a 15 minute entry into the money zone for a bullish play here. That's this wick on a 5 minute. You don't see that as a possible bounce zone because you only have the 5 minute time frame up and the price dropped below that money zone on a 5 minute. So is that a trade to the upside? I don't know. Maybe, maybe not. For me, if I'm looking at this 15 minute, I'm taking that trade for a bullish potential move to the upside because we have the 1 hour and the 15 minute that are both bullish, and the 5 minute is also bullish, but price just kind of went below the money zone. That's how it moves, right? So there goes your second trade. Price goes right back up into, and this time this was out of your supply zone, so that's good. Maybe we go back up and retest it. We do go back up and retest it. This is your 5 minute chart I'm looking at on the far right. That's your 1 hour far left chart. That's your 1 hour white candle that goes all the way up, right? And on the middle chart, that's that powerful green candle that goes up. So this is a great move from that entry. And the reason is because it's the money zone on a 15 minute. Price is back at 15 minute supply. What do? We're looking to possibly short this if it doesn't break out and go. So it gives us the peekaboo fake out, right? Like it didn't quite, it's a breakout fail. So as soon as it comes back down, if you miss that candle, you have another opportunity to short it here. So those are 2 short regions, and you know the reason why. We have an active bullish condition going on. So this thing could just be pulling back to the money zone in order to snap back up like it did right here. So you could take that long, but it's short-lived. And you got to stop out somewhere. So if you took that long, you got to stop out. But that's another money zone trade, okay, that you could take. And you get hit by supply. So this is why I say I'm really, really cautious about taking a long when price is at a supply zone. We'll see the difference soon. But instead, I might be a little bit short bias up here because, this is nothing but supply up here. 1 hour, 15 minute, 5 minute supply. Nothing but supply up here. So sellers, whoever took advantage of this move down here, they're getting the hell out. They're taking their coins and they're running for the hills. Okay? So this triggers this massive sell-off. And if you were a part of that mentality / psychology, you would get in on this move down. And that's all this is. But if you were a buyer from the psychology that, oh my God, that was a great CPI data, whatever, that's a big engulfing candle, I'm getting in on a pullback just in case this market continues to rally up. Okay? Those are where those guys are going to enter at the money zone. So why do I believe that? Well, look, we talked about the wicks that happen at this zone. Wick right out of that zone. On the 5 minute, that first one that we took, it kind of based out, didn't necessarily wick out, but this big, powerful engulfing candle is kind of a wick. Or rather, it is a wick on the, let me see, the 15 minute. So it's, no, it's not. Let's just keep it moving. All right. but it's definitely a powerful candle to the upside. So bulls are so strong that they sent that thing up. All right, so we come all the way down here. Why would you take along here? Well, it's starting to develop a base with these lines that just aren't straight yet. But let's look left. Okay, is that a 15-minute money? No. It looks like a 200 moving average in the middle chart for a bounce. Holy moly, look at this. It is a 15-minute money zone on the 1 hour. So that's that area where the 1 hour pulled back into. It just did it at the very last few minutes of this 1 hour. Okay, we're looking at 1050, 1055 candle, right? On the far right side, this is your 5-minute chart. This is your 1055 candle. That last 1 hour white candle is that move. We push right into the 1 hour money zone. That's a great area to long, right? Because we should see a wick. We got the wick, wing, gone. And you know, if you decided to take a level here, this would really be your first reason, because we pushed into 5-minute demand and a new demand line was formed right above it. So this isn't a bad demand zone down here. We're going to take that, move that up a little bit. Now we have a 13.1319 demand. That's a 5-minute demand. You don't want to see price break below that. So price reacts and moves ahead, right in, blew through the 1 hour supply, right into your 5-minute supply line right here. On the far right chart is what I'm focusing on most of the time. Why would you short this? I can't stress enough that, like, I'm not trying to take a long at a supply zone, and that's the only real reason why. It doesn't mean that I can't be wrong. I just don't want to do it. I've seen the stats show that this area is a better short than a long, and we'll see that that's proven wrong as we go on through the day. But so far, you got one bad long trade at that supply zone, right? And you're taking it because of the 5-minute money zone, possible bounce. And then they kind of probably even got there at this candle. No, it looks like that's the beginning. By the time they break down. So yeah, this wick could be indicative of that 15-minute candle. Who knows? But they ended up coming back up and then coming back down, right? So here goes another short opportunity at a supply zone. All of this was here pre-market. And the market comes back down. Comes back to a 1 hour supply, another short opportunity here. You take that, you make some money to the downside. Now, I was here waiting for this move. They get into the 1 hour demand and by this time they actually changed the condition to bearish. That's okay, because the 1 hour has demand down there. Just like we were in a bullish condition all day, but the 1 hour, 15-minute supply was knocking us all the way down to 5-minute supply demand. So in this case, you can't really go into the market thinking that, you know, the trend is always going to be clean and cut on the 15 or the 5-minute time frame. Although you do want that condition, ideally, you'll see why. Now, I caught this demand because I was trying to catch it all day. I tried to get in right here, totally missed all of this move, all this demand here to go to the upside. And I tried to catch this one. They missed me by like 5 points. We won't cry about that right now, though. Anyways, I see this entire move go up. I'm like, all right, didn't take any of the shorts from the zones. I'm looking for a long in this bullish condition. And then this bad boy comes in. And boy, was it worth waiting, because that one was the big bazooka. It created a new 15-minute demand down here. And we had prior 15-minute demand at 279. Market goes down to, looks like 263, and then ricochets back up. And on the 5-minute, this is what that looks like. So now that move was so strong from a 1 hour demand that it triggered a bullish, the 1 hour stayed bullish all day. The 15-minute currently went bearish on that drop, only to return to bullish by 2:30. The 5-minute was bullish after a 2 o'clock cross push, and it just kept on smoking to the upside. And that was your powerful play into this kind of like 1 hour demand to bounce out of that zone in this 1 hour bullish condition. So that ends up working. We break through the 1 hour supply. We're here at the 15-minute supply. Do you want to short this? Go for it. I don't know what's going to happen. But immediately that level gets taken out. They go, here, do you want to short that? Go for it. Immediately that level gets taken out. So that's how much I want to show you how, even though the other two worked, right? Like shorting right here and shorting right here, the other three, or even shorting right here worked in a bullish condition on a 15 and a 5. It doesn't always have to work, but a play is a play. The reason for the play is a reason for the play. Once we start to go down here like this and start to swing back up to test these levels for the fourth, fifth time. So this is 1 test, 2 test, 3 test, 4 test, and it failed. This is the 5th swing up. You got to start thinking about that as, okay, these levels can't be that strong now, right? Like, look at the momentum that came into this market. You got a nice 3-bar play here on the 15-minute middle chart that sends the market through the 1 hour. We get to the 5-minute demand, that's supply, that's going to get eaten. Like I said this live. And then that gets eaten up. And then boom, we make it to the 15-minute. Now, this is where I'm like, okay, take your profit and run. They break through that thing. Break through the thing for another 40 points. And then market comes back down and consolidates. By this time, the market is closed on this pullback. Market is closed. And guess where they're consolidating at this time? In the supply zone. Well, look at this 15-minute money zone play. Only for us to keep trending upwards for a nice move in the pre-market. So I broke down how I start my pre-market kind of preparation. It's as simple as just basically taking the 1 hour chart and marking out the macro levels that the market has been reacting from in the past. These lines come up automatically. I just put this in there so I can see it live throughout the day. Every day these lines move, so I know how to kind of like play while the market is kind of fiddling throughout the day. Now, we could have a parabolic breakout. I'll save that video for another time, but this is how I, kind of pick out my macro levels, which is as far as the 1 hour go, the 15-minute goes, which is up here, and then down here it was established later on in the day, but we did have that level as a possible bounce zone from the past, and you actually saw that we didn't have this level particularly formed. We had particularly chosen yet by the time that this bounce came in at 145. We had this level from yesterday, which is the same zone. We don't treat these levels like, oh my god, it has to bounce there. It is a zone where we expect X, a rejection or a bounce. And knowing that much helps, because now you're like, you just, at this point, I just need a 20-point stop. If you start to go up, and I just need to get in before you hit that 20-point mark, because if you leave without me, I will not touch you. I can't touch you. If you exceed that 20-point stop, I'm basically eliminating my opportunity, because like, if you go, let's say it goes 30 points and I get in at 30, my stop is no longer the swing low. It's going to be above that, and the market could essentially come back and make a higher low, stopping that play out. So I'm reducing the quality of that trade by letting the market escape my potential stop. So I approach everything from a backward perspective, and I take the trade based on the fact that I want to go in at a zone for a reason, whether it be that money zone in a triple threat condition, a double threat condition, whether it's bullish or bearish. We will see me take different trades, but there's always going to be they're always going to be the same type of trades. I only have 3 plays in my playbook. You've seen 2 today. I can show you the push play, but we didn't really get into a push play condition in this market. It's a push and a flush play, but they're both the same thing. It's just to the opposite direction. So there's reversal plays at a 15-minute or a 1 hour supply or demand line, not a 5-minute. And then so like this would qualify as a reversal trade for this downward trajectory. You take this reversal trade and boom, you get a crazy move to the upside. Ideally, you want to take money out of the market when the market crosses from this bounce or this reversal to the top of the Bollinger Band is target. So getting in here, you want to start scaling out, because this is where the market tends to react and continue on a downward trend if it wanted to. But you can see in this case it blew through it, so you always want to keep ammo in the chamber just in case that happens, and just kind of stop out if it breaks this zone or this grid here. And that's how I kind of approach every day to trading. Every day I set this up. Every day you would see me go live by around 9 o'clock, maybe 9:20 if I, just kind of late to the market. But I would try to do QQQ, NQ, ES, SPY, just like this, and the market will react from these levels almost every day with some pretty decent accuracy. So here goes your ES chart. I hope I didn't delete the lines for this, but if I did, oh, and yeah, I didn't delete the lines for this. So basically, here's your ES day today. And I didn't really move the charts, the lines around for ES. But by 8 o'clock, this was how ES was marked. And as soon as we got up there at 9:30, we're back here. So we had that one bounce right into supply of the 5-minute. And then the market rejected that level. Let me see. Sorry, I'm just trying to get there. Right, so the market went back up and rejected that level. I drew this line because I usually like to let the market kind of tap, come down, and then do another double top kind of move. But in this case, we got in at 9:30. So if they essentially break down that line, then you might see a violent move. So they broke from supply, came all the way down to a 5-minute demand, bounced up, right? Came all the way down to what level? The 15-minute and the 1-hour demand, popped up, came back down, broke that level. Sorry, that's actually a 5-minute supply. Sorry, 5-minute demand and a 15-minute supply here. Popped back up, came back down, tapped a 1-hour supply, and the entire market exploded at that 1-hour supply. I mean, sorry, why am I saying that? That 1-hour demand. I'm so sorry, guys. So it basically bottomed out there, and it just exploded from there. And that's why those levels are there pre-market, so that I can go to any stop, but I'm only looking at these 4. So by the time I go to these 4, if the market is at blah, I can just take a trade based on that. And I'm also looking left to see what the 1-hour is doing, or what condition is under before I take that actual trade. So around this time, the 1-hour kind of switched on ES. It was looking bad. It was looking really, really bad, guys. But nonetheless, a 15-minute demand line came right here on this middle chart. And once that comes in, I take the trade to the upside, and the reversal trade ends up paying. So I hope you guys had fun kind of understanding why these lines are on my chart. That's exactly why I basically put them on the chart, so that I know how to take a money zone trade, where not to take a money zone trade, how to take a reversal trade, more importantly. And every day I'm just kind of trying to do that at these key levels, and potentially, extract as much as I can from the market with a good risk reward management system or strategy. And hopefully you guys can somehow benefit from that yourself by just looking at the chart and coming up with your own trades. You don't necessarily have to take my entry. Sometimes I deal with the same thing that most traders deal with, which is, do I get in now? When do I get in? Blah, 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 blah. Like I'm literally talking about this live though as I trade. So you can see like sometimes a hesitation, or even when I do enter and I get out earlier than most people would. So definitely form your own strategies. If this is something that helps you, please, kind of comment, give me any questions that you may have for the lines. If it's a lot clearer to you now, definitely give us a thumbs up. I appreciate you guys so much. Thanks for watching. We'll come back again tomorrow and do it again. All right. Peace. Pre-market.